Good day everyone and welcome to session recap. Today is 22nd of August 2016. My name is Nenad and this will be the last session recap in the month of August. I'm taking a holiday break and I will be on holiday starting from tomorrow till 3rd of September. And I think that it's always good to have I can say a small holiday break, and then we are back in trading. And definitely I might give you a short blog what I did on my holiday. Did I make any trades? Because guys, to be honest, I'm going with my laptop and there is a possibility that I could make few trades here and there from the beach, and let's see. You know, the best about trading is you can trade wherever you are. You can actually make some small trades, not low risk trades, just, if you're passionate about trading with very, very low risk, but yet you can be successful. So let's see. Previous session recap was good. We had a couple of winners. We had also one loss. And well, we will see today. I hope that we will get some fresh pips. Basically, this is like swing trading, these session recap trades. You can go with a low risk, then you can protect your trade, leave your trade, scale out. There is a lot of possibilities where you can actually place your profit. So before I begin, as always, a standard disclaimer, then we can move on. And thanks for great wishes, guys. Thanks everyone, Darshan, Melvin, Emre, Bob, and yeah, everyone. So I will see you soon, of course. And I think that it's always good to have a small break. We all need to actually charge our batteries, but I will be back very soon. I will be here with you in 14 days, so it will be fast. Risk disclaimer: online educational materials are available at Admiral Markets Estonia for a global audience, so please take into consideration that these are not MUK's opinions. This webinar is for informational and educational purposes only. Risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. And of course, rules and setups, guys, for our session recap trades. You need to give price a breather. It means, well, we enter within the zone. We don't enter at the level, we enter within the zone. Zone is usually 15 to 20 p buffer. And the best thing is you can enter within 15 pips of the predictive level in the zone, but you can also scale in and scale in within the zone. So you're scaling in if you think that the price might retrace a bit deeper in the zone. Respect your stop loss and definitely do not move your stop loss. Stop loss is actually a great way to protect your trade, and one of the best things with your stop loss is you actually know where to put it because you know what your risk is. Without a stop loss, well, you can then, if you trade without a stop loss, you manually need to close your trade when you think that it's already above your threshold. Well, some people ask me very often, can I trade without a stop loss? Yes, you can, but the only prerequisite for trading without a stop loss is you need to press your left button on the mouse. You need to lean your finger on the mouse left button and click close if you see that your trade is going way too far in risk zone. So you can trade, but you need to close your trade manually. Okay, that's the prerequisite. Never trade without a stop loss, guys, even if it's a mental stop loss. Alternative trades are counter trend trades, of course. Breakout trades and scalp trade levels usually are done independently. We say it's a second entry to our position. Usually those entries that we make as positioner or alternative will be in profit, but if you want to make additional position, then you can go with either scalp trade or a breakout trade, whichever you think it will be better. Sometimes you can go with both, of course. Depending on time and volatility, usage of trailing stop is highly recommended, and I never ever take less than 20 pips. So guys, 20 pips is the minimum number of pips you should make with our session recaps. Of course, if there are some extreme circumstances like the price is going nowhere, you can actually close your trade earlier, but you already know that the less possible amount of pips you should have is 20, okay? So 20 pips, not less. These setups are valid for today, tomorrow, and sometimes the day after tomorrow. Scalp trades should be done at or very close to important support resistance levels, calculated by historical levels, and can rely you can add these levels to your system. Pay attention to my Twitter updates, and pips pool is the maximum available number of pips you could have got on recap entries. So past week results: 8th of August, euro dollar plus 75, pound dollar plus 40, Australian dollar plus 40, dollar CAD plus 20 or minus 35, and dollar yen was actually, did I count this in? I need to check it, guys. About dollar yen trade, yeah, we had actually pound yen trade, so this slide is not correct, guys. Let me just make it correct, because I forgot to actually place a pound yen. That was the trade of the week. Definitely the trade of the week was pound yen. It was good for possible 180 pips. Unfortunately, well, I personally closed this trade a bit early, but well, it happens. You know, you always decide yourself how you will manage your trade. So possible pips pool is like 300 to 335, and definitely the pound yen was the trade of the week. It's not just coincidence. I told you one of my favorite pairs really is, well, pound yen or dragon. I call it dragon, so it is a dragon indeed. So this is actually correct slide. So something in between 300, 335 pip. Well, yeah, this is now a good slide, Ron. Rex is saying only trade without a stop loss if you're using other people's money. Well, back in days where I traded other people's money, I also had a stop loss. Well, you know, it's not a good thing to trade other people's money, because people are always unhappy how you trade. When you make 3-4%, it's not good. It's too little money, too small money. If you make 10%, then you are risking too much. If you make a drawdown of 5 or 10%, it is too much. So you know, it's not for everyone. So that is why I really prefer not to work with other people's money, and I don't. That's the best thing I ever made. So the best thing is, guys, I teach you how to fish, I give you the analysis, I give you where you should enter, and you do your own money management. It's always the best, and everyone is happy. You know, everyone is happy. There is no answer, guys, there is no answer to your trading style. If you ask me how I should trade, how the hell I know how you should trade, guys? You trade using your own risk. If I trade with 2% of risk, maybe you will trade with 20% of risk. I'm telling you how you should be safe, how you should be stress-free. But how much you will risk, it depends on you. Your own nature, how you will trade. Trade however you wish, guys. I don't have anything against it. But have in mind that you will lose from time to time, and you need to stay in the risk threshold. So yeah, I know there are very, very good traders out there, such as Bob. Mr. Bob is one of our best traders, really a gentleman from UK, one really of the great traders. He is trading with a slightly higher risk, but well, it pays off. Darshan is also trading with a bit of a risk, right? But it also pays off. Some people like Ron are trading with lower risk. So well, I trade with also lower risk from time to time. I might go with a higher risk only if I trade with a smaller account. So I think I will make a special webinar about different styles of risk trading, and then I will show you how you can make money from 300 to 3,000 and how you can make money from 3,000 to 3,200 by different risk styles. You will see, and I think that you might use some of those strategies. Make money, then withdraw the money from your broker, guys. That's a good thing to do. Make money, then withdraw the money. Okay, withdraw the money. It's always a useful strategy. That is how you protect your earned money, your profits. So, past week results. So this was it. 12 pips pull 300 to 335. Well, if you made even 100 pips, it's good because, well, as you can see, definitely the pound yen was the best trade, and Dragon has proved to be again, I think maybe at this time, at the present time, my favorite pair to trade. I like other pairs too, New Zealand, I like pound, euro dollar, not that much. Like last 2-3 months it's been very slow. That's the main reason. But all of these pairs that I'm presenting you, well, yes, dollar CAD was for some people best, because if you entered later you could have made nice money. So Ankit is saying that he actually made good money with dollar CAD. Well, I'm very glad, and well, I had a loss on dollar CAD, but I don't care, because losses are also a natural way of trading. Those are natural. That is the natural course of trading, to have a few losses from time to time. It's not bad, believe me, it's good, because you cannot make always. There should be a loss from time to time. That means that you are in a trend, guys. If your account curve is like this, it means it's trending. If you see account curve as this, that means that you're probably taking a huge risk, and your account curve may get this, like this. So it's always good to be in a trend, always. Now, one of the things that I should also mention is, of course, as always, slides for the previous week to show you the actual what happened after our webinar. So here, guys, you can see euro dollar. We had an alternative sell around 1320, and here, guys, you can see 1320 was hit. Well, this, I thought this was the trade of the week, but to be honest, I think really pound yen, it was a bit late trade. It came a little bit later, but honestly, guys, I think pound yen, whoever traded it, because I did also an analysis, and I put it on Admiral Markets website, and that analysis was in a perfect alignment with these slides. It came a little bit later, maybe at the third day, but it was really good. This was also a great trade. So no drawdown from this trade, an immediate sell, and you see, well, basically it went down. So you could have made really nice money. Pound dollar, well, pound dollar, we had a sell position at 29.80. Then we had alternative swing scalp at 28.10. Here, guys, you see 29.80 was the last defense for bears before it went up. And if you shorted it here, you would have been in a slight drawdown here, but then it dropped for 40 pips. So I hope that you actually made money with this. You see, this was a tough nut to break, almost impossible level to break, and I don't know why, but you see, I mean, I know why, but I was really, I was thinking that it could break because this was a big selling candle here, but well, it couldn't break this level, so it made a double bottom and spiked up. Whenever you see, guys, double bottom, please protect your trades. Peter is saying that he cannot hear me. I think the sound is good, so yeah, you should hear me. Yeah, it's okay. So probably some sort of, maybe some sort of connection issues. I don't know. But nevertheless, guys, you see here we had a sell, then we had target here. Well, I mean target. You could have made some 20, 30, eventually 40 pips on this trade, so it was good. Australian dollar, well, I was thinking to sell, and I actually sold it, but well, you can see it spiked out stop loss, but it came down and went down as expected. So this was the news, guys, and what I'm telling you is, guys, after the news you will usually see a trend. You will see a trend getting back into the track as usual. You see here it was a downtrend, then Australian dollar spiked up during the news, but after the news it came back in a trend. And watch here, guys, where it rejected. Where did it reject? Where? From which level? Here, guys, from the level I told you to sell. Well, I don't know. If you traded this in the now moment, you would have made a losing trade. If you traded this after this spike from the news, well, you could have made a good profit. This was a no-brainer trade at this point. 1, 2, 3, 4 rejections, guys. Well, dollar CAD, unfortunately, again, this didn't go as I expected. I was thinking that it might go a little bit further, but it didn't listen to me. Well, what happened is we had actually, I mean, it was a good trade for some 30, 40 pips. Or here, guys. But if you actually, again, it's a bit subjective. If you made this trade here, you would have made maximum 25 pips. So this is probably a loss trade, losing trade. But if you made here another trade, this would have been a winner trade. So probably this should be counted as a losing trade. Although, as Ankit was saying, he made good money with dollar CAD. Well, I'm very glad. Probably you sold from 30-20 later and you made a good money. And this was really a great setup. Pound yen. Well, this was a setup that I was counting really all day long. Actually, this was the time of our webinar, and this candle should go here. You see, this was the time of our webinar at around 7 o'clock in the morning. It's actually 9 o'clock in the morning, platform time. Pound yen dropped down, watch this, from this level all the way down to here. So from this level, so forget about this candle, it should be here. 180 pips. Okay, very good setup, and definitely the trade of the week. So let's see what this week will bring. But Dragon was one of my favorite trades really for the previous week. I was particularly thinking about shorting, and I did the analysis, But then I did a slide and I explained that I'm really looking forward to short it, and here I'm really proud of pound yen being so good to trade. For this week, guys, yeah, I'm thinking about buying around 1250. 1200 is stop, 1380 final target, or to sell it at 1380, 1410 stop, TP 1250. So I'm thinking about it, and we will see what will happen. Now let me show you why I think it could happen. So let me open the platform and see what we can trade actually on euro dollar first. Okay, euro dollar. Okay, give me just a few seconds to open the platform. Okay, doesn't show up. Well, we will wait few moments. I think it will show up. Yes, of course. Okay, well, this was it. Euro dollar. Okay, here. Euro dollar, for this occasion we will use 4-hour time frame, and we need to remove this window, this indicator, and check if we are on weekly Camarilla pivots. Yes, we are. Fast analysis is telling us that we should buy at 1250. Why 1250? Because guys, here is where actual buyers are. The height of this candle was 1322. The height of this candle was 1330. So this high here has already been broken. So if we see a retracement down to our POC level, we should reject. Even if you place Fibonacci here, you will see that this zone has 78.6 retracement. Additionally, you can place a trend line here, okay, that of course can be adjusted. If it goes down, it can be adjusted a little bit to the downside. So you see, there is a lot of confluence here, guys, a lot of confluence. Even we could put an equidistant channel here, and you will see how the price is actually making an uptrend. So from trend perspective, euro dollar is long, right? So I'm thinking about buying it around 1250, and I will place, so this is my zone. So from the bottom here is the zone. Well, 1250, I mean, let's say 1260 to 1280, that is, I think it's better than 1250, so we will place it 1260. I will correct this slide. So 1260 is actually a buy position for our euro dollar, but if it comes to 1275, even to 1280, think about buying it. So it might happen. Let's see. You know, today is Monday. It's there is no big volatility. Pairs are mostly ranging, so this looks like a long. To the short side, I'm thinking about 1380. So 1380 could be actually a sell. Now, if you go to the past, you will see, guys, now watch this history. 1380 has had a huge number of sellers in the now moment and in the history, especially the short-term history. So if we see a spike to the upside and possible loss of momentum, we would, if we saw that, we would make a good sell trade. So from counter trend perspective, 1380 is where I would sell. So 1380 sell, 1410 is stop loss, target price 1250. Buy into 1260, well, with 15p buffer, of course, towards 1380. Protect your trade accordingly, scale out, put your stop loss to break even, and or protect it however you see fit, because you will see ultimately good money management will make your day. Pound dollar, I'm looking to sell pound and buy pound in the same time. Sell position could kick in 32.40 with 32.90 stop, 31.50 target. Alternative buy trade 29.90, 29.40 stop, 31.50 is target. So here it goes, pound dollar. Let me show you pound dollar. One of, I mean, also good pairs to trade. Here, yeah. A slide for the pound here. You see it now, right? 32.40, 32.90, 31.50. Alternative buy 29.90, 29.40, 31.50. Excellent. So yeah, let's see now. Pound dollar, well, effectively the same thing, guys. What I was telling you about. So let us use price action analysis in its traditional sense. That is always good to know. If you see that this is the high and this is the low, you need to short into rallies after the previous swings have been broken. So because this swing has been broken, okay, we need to short from the next swing. Next swing is here, right? So we need to put Fibonacci there because we are counting this candle now to serve as resistance. This resistance here was broken here. So I'm thinking if this high here is broken again, we need to short it from next level and next zone. And next zone happens to be here. Okay, here. And you can see double top sellers here, historical sellers here. So this needs to go up, and I would wait for an ambush here. This will be my trap for the price. An ambush. You are an assassin of the price. You need to come closely, wait patiently, and then when price gets close, you jump in and you actually, well, you use it to your own advantage, not against you, to your own advantage. So 32.40, 32.50, this is the level to ambush the price. Jump on it, piggyback the momentum, and then make some profits. From this spot to this spot is the zone, and I hope that we will get it. 32.40 sell, 32.90 stop, 31.50 TP, or if you don't see it, I would look to buy it 29.90, 29.40, and TP is 31.50, and 29.90 is actually very close to previous. Well, you see double bottom here, triple, quadruple bottom here. So I think that this is a good support, and it could show support on spike down. So this is pound. Australian dollar 77.00 is a sell position. TP is 76.05. Target is 75.50. Stop loss is only 30 pips. Buy position will kick in 75.50, 75.15 stop, 76.50 TP. And don't worry, I will roll the slides once I'm finished with showing you setups. So see here, guys, a lot of range in Australian dollar. But again, if you take a look at the slide, at the chart, you will see my logic. So 77.00 is the spot to sell into. Why? Previous double top. We have both double top and double bottom. So that is why I'm saying this is the range. See, it's not just a double top, it's multiple top here. So this is actually where I think the price might reject from. Take this wick here and the end of the body here. So this is like 77 and 77.30 is a stop loss. Add a little bit of spread and such and it is like 77.35. So this should hold the price from spiking more to the upside. See, even this stop here should hold it. Buy trade could kick in 75.50. So 75.50 is a potential buy trade. There is a lot of confluence here. See, 75, 65, 15 pip buffer. Watch this, 75, 55. So if we see a drop, I think we should have a bounce here. But to be honest, I would prefer a sell. Okay, I would prefer a sell trade. 77.00 with possible buy 75.50. Dollar CAD 1.3000. Stop loss is 30.40. Stop is 28.60. Alternative buy is 28.00. Stop loss 27.50. TP is 1.3000. So dollar CAD. Okay. 30.00 guys. Why 30.00? Watch this. 1, 2, 3, 4, 5 rejections. See, a lot of confluence here. Now, do we have a Fibonacci? And where do we put it? So because we are trading this candle now, we are going towards this resistance. We will use Fibonacci from that spot. So you don't, guys, draw Fibonacci levels here because you go with swings. So this is the previous swing, okay, and you go there. Here we had this swing, but it was broken. Now, if this high here is broken, then you use the swing from this spot. So you see, it's 78.6. It's close to 4, H4. Because of this EMA 89, well, it could maybe make a T89 to the downside. But here is the exact spot I'm looking to sell. A lot of confluence. Even here, you see here. So I think that there should be sellers. Now for buy trade, 28.00. Okay. Here, guys. Very close to, yeah, indeed it is. Double bottom. and L3 level. So double bottom and L3 should spike the price to the upside, and this level should tank it. So let's see. I would personally prefer a sell trade, and I hope that there will be some movement to actually catch this trade. This could be a good trade. And finally, New Zealand dollar. I did the analysis of New Zealand dollar today. 70 to 80 to 73 is a sell. I'm still seeing a sell. Maybe I'm wrong, but I'm still seeing a sell. Stop loss 73.30, target 72. Possible breakout sell 72. Stop loss above last high. TP 07115. So the price is rejecting from POC at this point. Here, guys, this is actually what I did. New Zealand dollar potential bearish M shaping up. So we might see, you see, I marked the zone. The price was 72.47 when I published the analysis, and I said that this is a POC. Because in the meanwhile, price spiked above POC, it has made another POC that is 72.80 to 73. Okay, so it looks like this. So New Zealand dollar 72.80, I think we might see a sell now, especially because we see not just a channel, but this is reaction. Okay, this is exactly the reaction because there is a trend line here. See? Yeah, New Zealand dollar is already triggered a sell. Use your own risk. I'm recommending between 0.5 and 0.8 to 1% of risk. Maximum risk per day is 2 to 3%, but never more than 5% if you trade traditionally, low risk way. If you trade with a high risk, then you need to adjust your trading lots accordingly. So this could be a sell trade. This is EMA. Robert is asking which indicator is the blue line in the middle of the chart. This is EMA 89. Derek is saying he took short on 70 to 90. Well, good. So you are 15 pips in profit now. Well, basically, I was telling you guys that if you read the analysis, I was telling you it should reject. Now the only problem is, guys, there is no momentum. It is rejecting, but without any momentum. That is what I don't like to see. Because now this trade is momentum dependent. No momentum because it's a holiday. It's Monday, it's a holiday, there are no big news, banks are on holiday, traders are on holiday. So whenever we see a holiday season, we should know that there will be less volatility. Well, even in New Zealand, this doesn't have to make anything because the most traded pair is, they say, euro dollar, but to be honest, a lot of people are just trading pound and pound yen crosses, and if you take a look at pound yen, you will see that even in low momentum trading, it can be a very positive experience. But New Zealand also, it's been you see, guys, this is enough for you to make your own judgment. Watch this. It's a range. See, up, down, up, down, up, down. It looks like a range. So that is why I'm saying pay constant attention to these POC points that I always make analysis with. POC points are zones where you can expect the reaction of the price, either a bounce or break. So break it, make it, or break it. Now guys, I will roll the slides again, and if you have any questions, go ahead and ask me. First is euro dollar. Now pound dollar. Australian dollar. Dollar CAD. New Zealand dollar. So guys, you see actually that this could be, well, I hope that it will go down. Let's see. What about my pound yen? Peter is asking. Yes, pound yen. I will show you what I think about pound yen. I already traded a small bit of pound yen today, and here actually I'm looking to buy into dips. It's been as a sort of well, this looks like it's in downtrend. It is in downtrend indeed, but here guys, I think that this level can break. See, it's a bit close. We still have room till next support, 132.50. When it hits this support, it could reject again and make another leg upward. So I'm looking to buy into dip. On 1 hour chart, it's different story. So this could have been M, but it isn't M. This is ranging, but this looks like to be a bullish range. See here? So it's a bit of ranging, but it looks like a flag, bull flag on 1 hour, right? Flag, a running flag. It's a running flag. Or a pennant. But well, it can be more, it's like a pennant than it's a flag. So I would assume this is bullish pennant. Either way, this is bullish to me. So where would I look to buy? Okay, here it's possible a buy trade. Possible buy trade, and yeah, this is inverse head and shoulders, guys. Correct. Someone said inverse head and shoulders. It is indeed. Watch this, inverse head and shoulders. And my place to buy will be here. 131.15. Well, I can go lower, guys. I don't mind. 131.05 to 131.30. So this is where I would be looking to buy if the price drops. Now, if this level is broken here, pay attention now what I'm saying, guys, because this could happen during Asia session. During Asia session, we would either see a drop here or bounce above this level. If this level breaks here, okay, it's 132.25. Well, then I would zoom in to lower time frames and looking for long entries towards 132.50. Okay, here. So during Asia session, we might see a drop or we might see a bounce. If we see a bounce above this region here, I would zoom into lower time frames. If it breaks 132.25, and using your own systems and methods, you should try to watch for possible long trades towards 132.50. It should be a scalp trade. But nevertheless, I'm a bit bullish on pound yen now. So I would buy here. Next question, euro yen and silver. Okay, euro yen. You see, I don't like this. This is range, and I don't like how it looks. Basically just up down without any clear direction, guys. Especially this range last couple of days. Mini range here, you see the main range and the mini range, and there is nothing to see. Up down. So euro yen is not that interesting. Watch this. Gap up, gap closed. Watch this. Strong it's not Marubozu, but it's strong bearish candle, then piercing line. Then strong bearish candle, piercing line. Strong bearish candle, it looks like it could close as a piercing line. So I don't like it. Euro yen, no, I don't have any opinion about trading euro yen at this point. Euro dollar, okay, silver then. Euro dollar, this should retrace and give us a sell entry. Now if you go to 4-hour time frame, yes. See why I'm saying it should drop. This is the zone where it should drop. You see, guys, you remember I gave you the indicator for spotting those supply and demand zones. Just watch our first price action trading school lesson and you will see how you can manually draw it. I still think that the manual drawing of these supply and demand levels is better than indicators, because this is how I do. I just find the end of the body and the weekend here. This is where sellers are. Watch this. You see? Exactly, guys, because this is what you should have done 3 or 4 days ago. Put it here, watch this. And here, normally it will reject. So I think this should have some retracement. The retracement could go up to this level and then it could spike. Yeah, this is the first level to watch for if it goes down. And this is the second zone. Exactly at L3, a huge confluence here. So watch for retracement towards this level and this level, these zones here. And then possibly think about buying it. Silver, okay, silver. Okay, well, I don't have metals here, sorry guys. Let me open I need to open my other platform where I have silver, then I will open it. Give me just a few seconds. I will try to open it. Yeah, here we can see silver now. Okay, silver, let's see, yeah. Silver, okay, range. Very clear range. And this is actually now master candle. This is master candle here. So what I would do is actually, you see this is master candle. Place both lines here. 1, 2, 3, 4. Next 3 candles should either break here or break down. If next 3 candles break to the upside, you can go for a buy trade, or if they break to the downside, you can take a sell trade. So this is what I'm thinking about silver. So you don't know where it will go. It should go up to close the gap, but I would go for a long trade if it breaks this high, the height of this candle. It's 1908. If it goes above 1910, you can buy silver, but ideally it should happen in next. Yes, it should happen in next 12 hours. You don't need to wait. Just pay attention to it. It should happen. But if it doesn't happen, well, Again, if it breaks this level, we could probably see a buy trade to close the gap. If it breaks down, it should proceed to the downside. Gold. Gold looks rangy, a bit rangy. Nothing to be seen here. See? Big range. Up, down, up, down. So I would go for possibly long trade here. Then if you want to short it, pay attention to, well, to these zones here. But yeah, ultimately this is a big range. I don't like it. I don't like it really. Yeah, this is holiday range, guys. So I cannot trade, or we cannot trade if there is no movement. So this is just a holiday range, no clear direction. So we would rather wait for some trending pairs. Pound New Zealand, Stalin is asking. Stalin, wait, Pound New Zealand. Let me find it here. I think I put it a bit higher. Wait, Pound New Zealand. Okay, symbol, I need to see show all. It should show Pound New Zealand. Wait a bit. We can go a couple of minutes longer before this is the last holiday before, the last webinar before my holiday. So no problem. Let's see if I can find Pound New Zealand. It should be here. I don't know why it doesn't showing up. Yes, it's here, and I need to move it a little bit to the upside here, like here, okay? You see, it's a bit strong downtrend. But this can happen. If Pound New Zealand goes above this level, it should proceed toward this level. So that is where we will put our Fibonacci. For safer trades, I would see what would happen here. You can probably make a scalp entry here. But for positional trades, next trade would be here, 81.92 here. This is where I would sell it, towards this level. Okay? But watch for these rejections, because they are happening, but still the price tries to break to the upside. That is why I'm eyeing this level here. So here. Dollar yen and euro GBP. Okay, dollar yen. Nothing much, guys. It looks like a pennant, bearish pennant here. Doesn't look that good. Now if we take only these two, we can probably make a pennant like this, you see? So actually, if this is the flagpole, watch for possible drop towards this level here. And sell, you would probably go for a sell here. This should be double top. It's too close, so we can use this one. Yes, 61.8. So this is the sell zone. This is breakout sell. Now it can go up because it's at support. Jeff, yes, I will go over the slides. Just give me a couple more minutes. I want to answer all questions. Euro GBP looking like it could go up, but I would really pay attention to this zone here. If it breaks below 86.05, I would pay attention to lower levels. So pay attention to lower levels if it breaks this. But it's same. It's a bit rangy at this time. See, price is just going up and down. Crude oil, it's at support now. It made a M pattern bearish. Now it's at support. And if it breaks down, I would definitely watch for some confluence here. Let's see. Yes, for this confluence here and this confluence here. Let's see if there is Fibonacci. Should be. Well, so this is the zone for a possible spike. If it goes below this level, it could go down, and here is the zone for another spike to the upside. This is the ultimate support here. If it goes down, it should proceed towards L5. But this is called the range. I don't think it will happen. So that was it, guys. Now I will show you the slides again. And I hope that we will make some pips here. As I say, I would be with you in next, well, I will be with you on 4th of September, and I will do the analysis tomorrow, and I will paste it, and that will be the last analysis before my holiday. And starting from tomorrow, I will be, and I hope that you will trade good without my help, at least for these next 14 days. And then when I'm back, we will get back on tracks with many new surprises with our price action trading school. I will schedule new classes soon, so you pay attention, guys, to new price action trading school. School is still in session. And of course, I wish you also a great time if you will go on holiday wherever you are. We will have session recap standard, analysis standard, and yes, 4th of September, the 4th of September, I am back. It's Monday, 4th of September, and then I'm back. Thanks everyone, Darshan, Ron, Emre, Donatas, Stalin, Jeff, Goran, Melvin, everyone. I hope that we will make good pips. And guys, don't forget, I'm here to help you. And stay safe, trade safe. Talk to you soon, guys. Cheers. Thank you, everyone.